FHA versus conventional. Hi everyone, if you are planning to buy your first home, you probably heard the terms FHA and conventional loan. But which one is better? Which one is the right for you? Many buyers get paralyzed because they think one is superior to the other, when in reality it all depends on your specific financial situation. Today, we are breaking down the real difference from credit scores to eligible property types to the hidden costs of PMI. So let's get right on. Let's start with the FHA loan. This is a very flexible loan. The FHA loan is actually designed to make home ownership easier. Let's start with the credit score. You can qualify with a score as low as 580. 580! And with as little as 3.5 down payment. Even people with lower scores, there is often a way, but it might require a large down payment. Now, what type of properties? This loan is great for single-family homes, townhomes, and even multi-family properties up to 4 units, as long as you live in one of them. Now, what is the cost of an FHA? This involves the mortgage insurance premium. You will pay an upfront fee and a monthly premium. Now, with this FHA loan, this insurance will stay for the life of your loan unless you refinance into a conventional loan later on. But what is the conventional loan? This loan is a long-term savings option, but the requirements are usually higher. Starting by the credit score, the requirements are generally above the 620. But in order to get best interest rates, you may want to be above the 700. Now, what type of properties you can buy with a conventional loan? Well, you can buy single-family homes, you can buy condos, you can buy multi-family units, even second homes or investment properties. Now, the PMI. Here you have a private mortgage insurance, which is an insurance that protects the lender in case you put less than 20% down. And what is the real cost of the PMI? That will be based on your credit and the loan amount, but it can range between 0.5 to 1% of the loan amount. For example, on a home that is worth $400,000, you could be paying between $150 to $300 extra every month just for the PMI. But the big difference, unlike the FHA, once your home reaches the 20% equity, you can request to have the PMI removed. And that money goes right back into your pocket. So, how to choose? Which one you should pick? Well, if your credit score is low or if you want to keep more cash on hand for closing costs, the FHA is the best tool to get you into the market today. Then, if you have a strong credit and maybe you plan to stay in the home for many years, then the conventional loan is usually superior. Why? Because they will allow you to eliminate the mortgage insurance, which it will save you thousands of dollars over the long term. At the end, I will say don't guess which loan is best for you. As your loan officer, my job is to run the numbers for both the scenarios for you and to show you exactly what would you pay in each. So don't hesitate and don't hold back. Just click the link and book your free strategy session with me. Let's analyze your numbers together. So stop guessing and start doing. I will see you soon. Bye!